All right. Good afternoon, everyone. Hope you're doing well. Hope you had a fantastic week. What an amazing week, right? I mean, we all came into this week thinking, well, there's going to be a lot of ups and downs, or maybe a lot of downs, right? Maybe you came into the week as a full bear because you didn't think that Amazon, Microsoft, and all these tech companies, the big five tech companies, would actually beat on earnings, or some of them beat. And we'll go through that today. And it's just it baffles me too that the market has continued to run for the last 3 days, even after bearish news on Microsoft and Amazon and Google as well. So let's go ahead and jump into it. I'm going to talk about the forecast for going into next week. I'll talk about a few tickers like Qs, the AMDs, the tech chips, blue chips. We'll talk about the SPX as well, and we'll just kind of go through the headlines for this upcoming, or for this past week, and for the upcoming week as well. So check this out. Look at Microsoft. Microsoft misses estimates. The stock is up 5% on rosy guidance. So if you saw the Microsoft's action when they dropped their earnings, it actually went down, right? And then it all pumped all the way back into the green. And then they issued a guidance for the remainder of 2022 and 23, and it was very, very good guidance. So the market enjoyed that. So guess what? Even though they missed earnings, the stock is up 7% on the week. Google, let's talk about Alphabet. Alphabet misses on earnings as well. Ad revenues down, but their cloud-based businesses are up. Great news. It's up 6% on the week. That's Google. Let's jump into Amazon. Now, Amazon actually did beat expectations. All right. And it up over 11% on the week. Let's go to Apple. Apple beats on revenue. They actually said they had record device activation. They don't see any demand slowing down for iPhones into the next year. They doubled their sales in India in the second quarter, which is pretty amazing. So there's no slowdown of demand for their products, which obviously where Apple goes, the market goes as well. So Apple is up 5% on the week, a little bit, some hesitancy around the 164, 165 area, but we'll see what happens going into next week. And what I'll say from all of this is the fact that, hey, going into this earnings week or this earnings season, the analyst estimates, okay, Wall Street, everybody and their moms pretty much predicted that none of these tech companies are going to are doing great. They're all going to get hit by slowing down in sales, recession, inflation, and of course the dollar, the U.S. dollar strengthening is a threat to some of these big, large corporations. Now, of course, the numbers actually came out not as bad. So when things aren't as bad as people have been saying, or the market believes, well, things run back up, right? So Apple up 5% today. Another headline news is the FOMC. Powell, are raising the rates by 75 basis points, and it wasn't 100. So the market already kind of priced in 100 points. All right. And it expected 75. So what happens? Well, we have the highest inflation on record still. And here comes another 75 basis points, and the market went crazy. Imagine that. Right. All right. So, highest level since 1982. Look at the performances across the indexes. SPY up 3.5% today, or this week. Okay. Q is up 3% this week. IWM, Russell 2000, over 2.5%. And the Dow Jones up about 0.5% or 2.5% as well. We can see from the sector performance chart, the energy is, people are piling back into oil because XOM actually reported today. They did well. Consumer discretionary, what's getting sold off is, of course, Walmart, Target, Costco, and some of those big names as well. They're having to do a lot of fire sale to get rid of excess inventory. But technology modestly up, and materials, etc., financials. So a very, very green week across the board. And the final question at the end of it, and everybody wants to know, is the bottom end. Okay. How long is this run going to last? We don't know. Obviously, nobody knows. All right. But, quite frankly, the fact that the Fed only did 75 basis points is that I do believe that they think, right, or the committee thinks that inflation is hot. Okay. And you've seen how when CPI for June came out earlier this month at 9.1%, which is a record high since 1981, the markets ran up anyway. Okay, so you can safely assume that any bad news about inflation going forward is going to be just shook off. Nobody cares anymore. Nobody cared about Apple slowing down hiring, nor Microsoft, nor Google. Nobody cares about inflation anymore. It's no longer a threat until it becomes a threat. We don't know, right? So we're going to have to see what August CPI looks like. FOMC do not meet until September. So August is kind of Fed clear, if you want to say that. We're going into Monday. It's going to be August 1st, first day of the month. So it's looking rather bullish right now. Also, like I said, earnings was good enough, not as bad as feared. Okay, let's just run the stock price up. So it's pretty wild. I hope you got some of this momentum in this trend, and I hope that you weren't sitting on the sidelines just waiting for to buy puts, because if you did, well, a lot of folks sometimes buy puts as support and the market runs up. So just be careful going into the next week. It's looking rather bullish for now. So let's go ahead and kind of check this out. Check out the charts. I'll start with the Qs and we'll go through it. Start with the weekly just to begin with here. Okay, as far as volume goes, volume is low in the market. We know that, right? July and June has been record lows on volume. And we saw this week, we do have record low on volumes. Now, here's the cool thing that's with this weekly momentum so far is the fact that, hey, look at this. I mean, the CCI is actually turned up bull side, all right? You have the Stochs curling up on the upside as well. And it actually closed above the EMA 21 for the first time since the week of March 28th. Okay, so Qs are coming around here. All right, we know that it held the EMA 200 perfectly over in the previous weeks in June and July. All right, and it's starting to run up. Look for these weakness areas. Okay, remember back in March and April here, it did hang around the EMA 21. Sorry. And I actually tried to hang out in the EMA 3450 on a weekly cloud. So these two areas going into next week are going to be quite critical. I absolutely think, somehow, some way, the markets will run to actual 320 next week. Okay, so you're going to meet some resistance here at the EMA 318 area. All right, so this is kind of a demand zone, right? I mean, there's a lot of volume here, and you're going to start moving into this area where it might, investors or the market might start to pull back. All right. So we'll see what happens. Let's go over to the daily chart. Once again here, the daily chart, look at this. I mean, this is just, it's starting to break out, right? We did see some notable weaknesses towards the end of the day at the 316 level. So we actually broke through this June 2nd high of about 315. So now the goal for next week is see where it can hit. Right here is 327. This is an EMA 200 on the daily chart. That would be some type of resistance there. As we go up into this area, now we're moving into the May area. All right, May 2022, there's going to be a resistance at literally 325 and of course 330, around 330. There's not a ton of resistance from this point forward. If AMD beats smart, I'll talk about earnings. AMD is reporting next week. PayPal is reporting next week. A few other smaller tech names. This could potentially be a setup on going into Monday for another run towards that 320 because it's more of a psychological resistance. So watch that 320. That's kind of my target for next week. We'll see what happens if it continues to move into the 320 area. Ideally, as a bull, you want this to come back towards the 310. There's a demand here at 310. Right under 306 area. There's a demand zone here. You would want to see some type of pullback for another move, kind of like this pullback here, right? When just a few last week, when the Qs ran to 307 to pull back into 294 and then bounce. If bulls really want to take advantage or go long here, you want to see some type of pullback and not chase calls on the top here. Maybe some type of pullback to a psychological support at 310, and then wait to see if that holds. And if that holds, then boom, right? You could see another big move. But the momentum, once again, this is three white soldier pattern. On the momentum side, it's too heavy on the momentum to deny the run up here. Now, with that being said, obviously with this run, your stochastics and CCI is obviously overheated, right? We're back here again. Remember when the stochastics hit this area, if you remember this area here back in May and June, and if you remember this area here back in early July, and this area here, it's starting to repeat the pattern. Okay, so once this comes up and it tops out and starts curling back downwards, I do see that there's going to be another green day on Monday. Okay, I see that. And I will have to go from there from Tuesday on. We'll scalp the momentum, and you have higher volume today too on this run up, which is ideally what you want to see as a bull. All right, so pretty bullish charts going into next week. Let's see, on the 2-hour chart, I'll kind of give you guys some short-term targets here. On Monday, you can see this is flagging, staircasing up. Ideally, once again, you want to see a pullback into 310, lower 310, so like 313 in this EMA 915 cloud. If this EMA 915 clouds hold again, please buy calls here, all right? Because it may just run up here once again and staircase up. I do think that there's a slight run up and then a slight pullback down to 313 before it test that lower support, and then before running back up as well, or running back up. Okay, so let's go over to SPY. You know what? Before I do that, let me actually go to SPX, Standard Poor. All right, so look at this. Okay, so I started plotting how big are these rallies, right? These bear market rallies that we're in. Obviously, we're here in November, December. This was the high of Standard's SPX. All right, when it dipped down to a low back on March 8th, okay, it rallied about 11%. All right, back in the 4,600 level and fell off. Here is another brief rally back on April 29th towards the beginning of May, and that was a run up about 4%. Once again, another run up here. All right, this all correlates with FOMC and CPI data release. All right, on May 20th, and that bear market rally lasted about 7%, which was 1 week and 6 days. All right, so back at the 4,100 level. Now look at this dip here. This the most recent drop all the way down to 3,700 levels. All right, that was about a 12% drop from these rises here. So look at this. All right, we are in a rally point from all the way, we're 1 month, 1 week, and 6 days into this rally. About, let's just say 6 weeks. 6 weeks into this rally. Surely it was choppy. There was some bottoms, okay? But for the most part, this is ideally if you're a bull and you want to start picking bottoms and start buying up your favorite tech names, blue chips, accumulate shares. I think this is a good start. I wouldn't say, drop 100% your port into shares. I would say dabble at this point. A pullback has got to happen at some point. But you can see in this rally, we're already up 12% from the most recent bottom. All right. So this rally has been extending itself, and it's looking very promising as a potential lasting bottom. Now, if you look at my moving average lines in this rally, we've knocked out 1, 2, 3, 4, 5, 6, 7, 8, 9, and it actually broke the 9th moving average. And you're starting to see these upper longer trend lines are starting to curl, okay, which is ideally what you want to see in a run up here. If you guys go back into the COVID days, I don't know if you guys were trading back then, but look at this. When COVID, all right, when S&P started crossing 9 different trend lines, okay, or I'm sorry, moving averages, is literally right about here. Okay, so back here was really nice. There was a nice run up. Okay, QE, free money, stimulus money, blah blah blah. But right about here in this area, that's when it started crossing multiple moving averages. So we're already doing that here today. Okay. So is this a lasting bottoming process? One can argue, is this the bottom? One can argue that to be true as well. Macroeconomics do not look good still, right? I mean, inflation may or may not have topped. There's still a lot of uncertainty out there. So there's still a lot of argument that you can still see a lower low. But at this point, this rally has been very fierce. And the momentum is kind of hard to stop here. So we'll see what happens going into next week. So I'll go back to the regular charts here. So Let's talk about Apple real quick. Some of the targets going for Apple. So Apple actually moved above and closed above the moving average 200 daily, which I mentioned the other day, and has not done so since May 4th. Okay. Decent candle here, but look at all your CCIs across the board. We're absolutely overbought. All right. On a lot of, and it can happen, right? In the bear market rally, things can be overbought for an extended period of time. But as we move up into these, as this momentum keeps going, it's going to kind of, it might exhaust itself out. If Apple goes, then so does the market. As far as the 2-hour chart here, if the momentum continues, this with this staircase up here scenario that we have, look for a dip to about 161, or maybe even right at 160 for another ride up. Okay, I would not start chasing all of these tech names going into Monday. You need to see a dip and some consolidation for the next run up. Okay, Microsoft. Let's talk about Microsoft chart here. So 3 white soldiers once again. It's still going up. All right. Dan Niles on CNBC said that, hey, I'm short Microsoft. Well, and blown up here. It's at $280. So Microsoft has gone up about $20 since Dan Niles was actually short on Microsoft. Once again, we are overbought on the daily and the hourly charts as well. Okay. Lot of overheated charts. So going into next week, let's see. Let's go ahead and go back to my PowerPoint here. So going into next week, we have these earnings coming up. Okay. The ones that I'm most interested in would be AMD, would be PayPal, and possibly on Thursday, Block or Square. Okay, so those are the big 3 that I'm looking at next to or for the next week. So let's go and take a look at those AMD charts. AMD broke out of the flag here, and it's continuing to run up. It has officially filled the gap at $94. All right, great earnings. Chip build news has passed. Okay, we know that. If they have great earnings, look for a very strong move on AMD. This is, let me see a pullback towards the $92. This EMA 915 on 2R. Let me see a pullback on Monday. If I get a pullback in the markets on Monday, I'll buy AMD calls. All right, PayPal. I mean, it's just one of those things, guys. Once again, I wouldn't be a bear on PayPal either. Yes, they missed estimates last quarter. We know that. Yes, every tech company and these financial services like Upstart, Affirm, all of them, they're all doing poorly. Okay. But they also set the expectations very low for this quarter. So please, if I see a dip, I'm going to take the PayPal dip. All right. Give me a dip towards the EMA 21, 84, $85. And I'll play the calls going into earnings because I think that with this gap up here, I'm not saying it's going to get filled anytime soon. That's a pretty big, lofty target, but at least give me $100 on a $94, $95 call here towards that EMA 100 on the daily. So I'll consider that. And also, let's talk about SQ, which Block Inc. All right, broke out of a bear flag here. Retested that support resistance. Okay, so once it broke out, it actually on Thursday kind of came back down to retest that, but now, hey, it's moved over to EMA 50. So as tech runs, this is going to run as well. So again, once again, give me that 2-hour dip to the 75 down to the $74 mark level. If those levels hold, let's go ahead and play the calls on the SQ. So I'll probably dabble in some positions going into on Monday. All right. So with that being said, that's pretty much it. Quick and short video for you guys. You know what? Stick with your game. I know it's easy for a lot of you folks, everyone, right, to feel like a genius. I mean, weren't you a brilliant trader today? Right? Didn't you feel that? Didn't you just ooze of excitement and you're patting yourself on the back? Of course, it's. Well, by the way, congratulations. But of course, it's easy to feel that way whenever we have a nice trend, right? But those trends, especially in this kind of market condition where things can sell off on bad news, do just make sure you're watching your positions. Be nimble, all right? Pat yourself on the back and move on to the next trade, all right? Take the profit and move on. Still continue to practice good risk management. If you get into the trade and you're saying 10% is all I'm willing to risk, stick with that rule, all right? Or stick with that strategy and move on from the trade if it's more than 10%. All right. Whatever your stops are, make sure you do set stops. Okay. At least some type of mental stop. So with that being said, that's it for the market update for this segment. And for those of you who are watching this video and do not know about the Rock Trading Co., please visit our website. It's therockTradingCo.com. I will, why trade by yourself, right? If you're looking for community to chat with during the trading hours, if you're a full-time trader, even if you're aspiring to be a full-time trader, you can come join us in our community. There'll be daily videos, weekly updates, watch list signals, alerts, etc. It's all here at the Rock Trading Co. It's only $59 a month. It's, I'm going to extend that price into August. Okay. And with that, every time someone signs up, I actually donate $100 into a Christian or faith-based organization for charity efforts. All right. So that's it for you guys for this segment. And I hope you guys have a great weekend and see you Monday.